Excel accounting practice problem. Purchase and finance equipment. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now continuing to enter transactions into it. If you have access to it, there's two tabs down below, an example tab and a practice tab. The practice tab starting out where we left off last time. The example tab in essence being an answer key. Let's take a look at it now. We're going to go through the purchase of equipment. So we're going to be increasing our equipment, which you might call property, plant, and equipment, depreciable assets, putting it on the books as an asset instead of expensing it at the point of time of purchase, not simply because we're financing it. We would do the same thing as we did in prior presentations if paying cash for it, but because we need to allocate it over the useful life as it is used for comparative purposes, that being an accrual type of idea, an accrual type of process. Even if you're on a cash basis, it's an accrual kind of component that you're going to be locked into oftentimes, because the tax software, when you do your tax returns, will have specific rules with relation to capitalizing fixed assets and so on. So we're going to be increasing the fixed asset, the equipment, the furniture and equipment. The other side not going to cash because we're not paying cash. We're going to assume and imagine we're taking out another loan. As we take out a loan to finance the purchase, we now have multiple loans that are going to be in place. And as we've seen in the past, we got to be careful with how we're going to manage these separate loans, because loans often are going to be set up for business types of loans to be paid off on monthly installments, an installment type loan. They might have a short-term portion and a long-term portion. Therefore, given the fact that we're going to be paying some of it off in the short term, and then we'll have some that's going to extend into the long term, for presentation purposes, we would like to show the short term and the long term. However, for data input purposes, it's easier to have them combined in one account. So I would combine the loans into a short-term account and break them out periodically, as we will do in the adjusting entry process at the end of month or year. Also, for presentation purposes, it's nice to have one loan payable account on the balance sheet instead of multiple loan accounts. It's nice to have multiple loan accounts when you're managing the accounts and putting them together in the book so you can tie them out to the loan amortization schedules. So that's another area where you could look into adjusting. I would make multiple kind of loan accounts, one loan account per loan that I can tie out to the amortization table, breaking out short-term and long-term portions as I need to at the end of the month or year, and then either make sub-accounts, possibly making sub-accounts in something like a QuickBooks software so that you can collapse them into one account for presentation purposes, or when we're working in Excel, we can, of course, combine those accounts if we so choose when doing presentation purposes, making, in essence, the financial statements from them. Okay, so let's go back on over to the practice tab. We're imagining to buy a piece of equipment. Let's do our setup stuff. First, hiding some cells. I'm going to go from the skinny all the way to the left to go to column A, right-click and hide those items, hiding them. And then I want to copy the ending balances from last time, make those our beginning balances this time. So I'm just going to copy those and put them over into our beginning balances, pasting them specially 1, 2, 3, and then removing the data in the middle column so we can focus in on what we're doing at this time. So the journal entry is going to be straightforward type of journal entry. We're just going to increase the furniture and equipment. Now, as we do this, also just realize that you may have different sortings, and we'll look into this in more detail later about your property, plant, and equipment type of accounts. You might just put them all into one account, property, plant, and equipment, and then have one accumulated depreciation account, or you might then have different accounts like furniture versus equipment versus automobiles, building, and so on and so forth. It's often nice to match up those categorizations to what the subledger will be looking like. The subledger often not done in accounting software, even when using QuickBooks or some other kind of accounting system within the accounting system, because you're going to need multiple amortization schedules in the tax software no matter what. So oftentimes many businesses will be dependent on tax software for the subsidiary ledger. Therefore, when you make your categorizations for the property, plant, and equipment, you might consider matching out in some way to the categories that will be shown on the tax software, working with possibly your CPA firm in order to see that so that you can have that same categorization, making the adjusting entry process easier, which we will see shortly in future presentations, and we will see again in the adjusting entries. Okay, so let's go down here. We're going to record this out on 2. They're going to say this is at 2, let's say 28, 228. And we're going to say furniture and equipment is going to go up. The other side's going to go to loan payable. I'm going to make another loan payable. Instead of putting it into this one, I'm going to change the name of this one to loan payable number 1. And note, if it was in practice, you might call it loan payable and then possibly the vendor, possibly then the last 4 digits of the loan account, so that you can tie the loan out to the specific amortization schedules so that you can then check your loan balances. We're just going to put a 1 and a 2 to make them 2 distinct loans here. I'm going to select the item below, going to right click on them and insert. So we got, and shift these cells down, and I'm just going to call the next one generically loan payable number 2. Now, if this was in accounting software or something like that, again, you could make another account called loan payable, for example, and then create the sub accounts underneath it, loan payable 1 and 2, which is another thing that can add another layer of complexity, but also more detail in accounting software that's more difficult to do is just in a spreadsheet as opposed to a database. So let's go down here and say we're going to say this is going to be equal to the loan payable 2. Indentation, alignment, and indent. We're going to say it's just $5,000 that we're going to be purchasing and financing. Let's post that on out. We're going to post it up to the furniture and equipment. We're in X10 equals, scrolling down to that 5,000, bringing it on up to 103, both on the month as well as the year to date, because they're balance sheet accounts. The loan payable, we're going to be down here, also a balance sheet account in X15 equals the 5,000 credit, bringing it up to 5,000 for both the month and year to date. Due to it being a balance sheet account, it should be the same. So now let's post it out to the general ledger. Here's our furniture and equipment. Furniture and equipment up top here as well. It's going to be like the second to last green or asset account. So let's go on over to it. So there it is. It's right down here. Furniture and equipment. We're in AR17. This is on 228. We're in AS17 equals left to we hit the wall till we hit the wall 5,000. Enter. That brings us up to the 103, that 103,000, matching what's on the trial balance as we saw here, and we're out of balance in the 5,000 until we record the other side. The other side needs to be recorded to the loan payable 2. Loan payable 2 we have to set up because that's a new account. So let's see if we can set that up. Scrolling to the right. I think we can. I think we can do it. So is there any more blank spaces we can use here to make this? So I got this blank space over here. So maybe I'll try to pull this all the way over to clean up our stuff. So I'm gonna put the prepaid insurance. The next thing should be this short-term investment. So I'm gonna copy that or cut it. I'm gonna say Control X, not Control C, and move it right there. And then this one needs to be moved up. So I'm gonna pick that one up and say Control X and move that one up here. The next one is the accumulated depreciation. So I'm going to take that one. I'm going to say Control X, and I'm going to move that one right here. And then the accounts payable needs to be moved up. So I'm going to pick that one up and say Control X and move that one up here. And then we got the Visa. So that's the next one. I'm going to say Control X and move that one down here. And then finally, we got the loan payable. I'm going to pick that one up, the first one. Control X and put that one up here. And then I'm going to copy it, Control C this time instead of Control X, and paste it just for the formatting. And then delete the stuff in the activity and the beginning balance. And this is going to be our new loan payable. So in AZ14 equals the new loan payable account. And then we'll put the date here, which is 2/28. We're now in BA17 equals left to the wall, picking up the 5,000. There it is. We need to add that to our check figure on the G to the L, the GL general ledger. So there's our negative 5 or our out of balance 5,000, the red 5,000, double clicking on it, putting our cursor on the end and saying plus so that we can pick up that 5,000 and get us back in the balance again. Back in the balance again. 5,000, there it is. Enter. Back in balance again. Looks good. Looks good. So everything is up to the date of today. So no effect on the income statement accounts. This is where we are at this point in time. This is where we're at. This is where we're standing right now. You can check it out, see if you're standing in the same spot until we move, until we make another move, until we make a step forward, hopefully forward step next time.